Let me talk briefly about diversification. Everybody always talks about diversification. And what is it? What does it mean when it's about stock trading? Basically, diversification means that you're having a mix or a variety in your pool or in your bucket, okay? So let's say I have a bucket right here, and this is my portfolio. This is my investment stuff. And it's a little bucket here. And in here I have all my stocks that I carry around and hold, okay? So what you wanna make sure you do is you mix it up. You have a tech company, you may have an oil company, you may have an industrial company like a railroad, you may have a pharmaceutical company, okay? So you're mixing and matching different types of things. And the reason for that is, let's say somebody has a bad day in tech or a bad year in technology companies, like they suck for a whole year, then tech companies would go down and this part of your portfolio would really be hurting, but you have all these others that might be doing really well. So it's kind of hurting a little bit, but then all these other things are doing well and it's helping your overall total bucket. Okay, now if you had everything tech, then basically, let's draw a different bucket. If you had an Apple, and then you had a Microsoft, and then maybe a Google, they're basically all tech. And if tech went down in price, all of a sudden, all of these would kind of go together. They kind of follow each other on one hand, you know, they feed off of one another. So what you want to do is you want to make sure you're mixing and matching a lot of the companies, especially if you're in a longer term investment. Otherwise, if you're investing everything in tech or everything in oil or everything in the pharmaceuticals, then you're taking a larger risk. And that's what diversification means, is you're splitting or mixing up your types of companies. And you know, you have other things like telecom and stuff like that. But basically that's what it means. You're mixing and matching. So make sure you're diversified within your portfolio, especially if you are new and you have a pool of stocks. And that's what it means to be diversified, is to have a split. So if you're stuck in one industry, tons of oil companies or tons of automobile companies, be very careful, because if one major automobile player goes down, you're going to take a tumble on your bucket or your pool of stocks, and your investments will take a huge hit, versus if just one of those will take a hit in a diversified portfolio, you should be still fairly good or okay. Now, you won't get as large of a gain, possibly. If you had a lot of tech and tech went up, you'd get a larger gain with a non-diversified portfolio, but it's not as safe, and safety is a huge concern when it comes to investment, because you're always trying to grow your bucket instead of lose and risk a ton from your bucket. And this is going to depend on your risk strategy. It's going to depend on the age. It's going to depend where you're at, your risk tolerance. So it's just something to keep in mind. But diversification is definitely a lot safer than focusing in one industry or one sector of certain type of stock group.